Hey everybody, welcome back to KF Trades. In this video I'm looking at two more potential EV trades, and I will go over those and the technicals and how I might play those. So let's get out there and make some money. Okay, couple more EV plays that I've been looking at. One I've been watching for a while is Vale, and a little background on them. It's a Brazilian metals and mining company, largest producer of iron ore and nickel in the world, plans to deliver 30 to 40% of Class 1 nickel to the EV industry. They're in infant stages of a new nickel plant in Quebec. Yeah, they signed a multi-year deal with Tesla for battery materials. So when they made their high back here in June of 21, so over a year ago, you got this downtrend off of here, and they haven't made any new highs. Just keep making lower highs and lower lows. So with the resistance from this trend, from the low point to this low point, they held it right here, bounced off at this day, but then opened below it, so they broke that. Went down, came up, didn't clear that resistance. All your moving averages are in a downtrend. The 50-day just crossed over a couple days ago, a week or so ago. Now the 100-day is right at the 200-day. So, I mean, it's still in a downtrend, but it's something to keep on your radar. Like I said, it's a pretty good-sized company, and they do pay a dividend. I think they paid like $268 or something last year, and they paid a little bit this year already in, I believe, April or March. So how I would possibly play this. So as you can see, there's a resistance right off this high, right here, and then it bounced off at here, right around this 1215 area. And then I have some resistance around that 1350 area, bounced off here, right in here, hung around it right through here. So if we watch that 1350 area first, and then possibly watch down to the $12 area. So what you could possibly do on this, you can buy it outright, try to get a little bit of a dividend, or just play it by options. You could look at the date on this one is for 7/15, so that expires here in a couple weeks. But there was a lot of volume in this one on Friday at the 14 strike, so this is probably people either getting out of these thinking it's going to move up, or they're just selling this for some premium. And there's still a lot of volume out to $19 on this. But remember, we have CPI data 2 days before this expires. So that's kind of a risky move, not knowing how the markets are going to react or anything. They offer weekly options on this one, so you could play it each week. So maybe wait till after that CPI data and then look at the 7/22 expiration for that following week, and then start looking at selling a $13 put. So if it closed below $13 on expiration, like right here, if you sold one at the price today, for example, let's just put it in the middle, say you got 30 cents for it, between 22 and 40 cents. So say you sold it for 30 cents. By the time it was all settled and done, you would end up owning that at $12.70. It's a little bit above that mark of the 1215 resistance. But I think right now, if you were able to get this stock anywhere between $13.50 and $12.15, looks like a pretty decent move for right now. Stochastic still looks like it's rolling over a little bit right here. And then the RSI, same thing. So its relative strength is moving to the downside. So I think you have a little bit of time to watch this. I would possibly wait till after 7:15, find out where that CPI data is going to end up. But then after that, you can start selling weekly puts on this and get $30 a week or whatever that they end up going for. So they report on 7/28. CPI data, you have the Fed right around that time, and then you have their earnings. So there's a lot going on with this stock that can move it. With that said, if they report on 7/28, let's look at the following month options. See what there's not a lot of volume out there on this one, on either side of it. Let's check the following month. Now there, the volume picks up. So you start talking out to September, and there's a lot more volume, open interest out here at the $19 and $20 range. But the one on Vail that you may want to look at is end of the year, January of 2023. A lot of volume out at the 20 strike. And that's just above that 19 resistance that we have. I don't know, that's a pretty substantial move if we get any more downside to it. Unless they really come out and beat on earnings and crush a couple of them. That might be a big ask, but they're pretty cheap. About 1.5% on those right now. But big volume. 131,000 contracts out there at $20. So that's something that piques my interest right there. Even out to 30, we've got a lot of volume. 82,000. So I'd be watching that one the next couple of weeks. See where that one plays out, but you might be able to just buy something at the end of the year here relatively cheap. So the next one for an EV play that might be interesting is Life Cycle Holdings. Now the caveat right off the bat with this one is it's a SPAC, and they have just been beaten up. So it's not profitable right now. They're working towards profitability. Who knows when that will be? That's the major caveat. Tesla had announced a while back that they were moving their standard range batteries to lithium ion, and that's what this company does, is they handle the recycling of lithium batteries. They've had a few things going on here, and as you can see with the resistance, so this 1170 was their IP open price, this line up here. Their price target is around 1150, so they're betting on it pushing up towards that. This 945 line right here was investments from Glencore and Koch for $300 million in convertible notes at that 945 price, which happened back here on January 26th. So you can see that had a moved up there, touched that area, and then moved back down. So that 945 area might be some good resistance to work off. So right here, it's been bouncing off this area down here at 6 something, and had a low here of $6, and then a low right here of just below that, $5.90. So those are your lows in that stock. So you could do the same thing with this one. They just expanded in Arizona. That one opened, I think, in May. And then they have another facility in Alabama later this year. So the volume right here, why it spiked up, was that they were selected as the preferred vendor for a couple of Korean companies. And along with that, they were investing $50 million. And then the big volume here was they were added to the Russell 2000. So you got to remember, a lot of growing pains going on right now, but they've set up a really good base rate here at just over that $6 mark. And you can see right here, my 200-day just came into view right here, so they've only been on the market just over 200 days. Same thing with this one. The stochastic is getting low enough. It's at 14 and 20 right now. It's at 14. So if we get a little bit more downside for the next, like this next week or so, if we get around down here, but it's close enough, you could do the same thing and start selling like a $6 or a $5 put. $5, it hasn't been down there. Who knows if it will get there. But if this is a company that interests you, you could do the same thing and start selling a $6 put in there at 15 cents, so $15 for one contract. You know, for that expiring in 2 weeks, I mean, that's a 2.5% return just on that. But like I said, and these only do the monthly ones. So if you look at the next month, not much volume, but you could get at the $6, you could sell one for the following month and do really good on that premium. I mean, that's 7.5% just for selling a put on that stock. And then if it doesn't get picked up, you made, you know, your $45, $50. Yeah, they report in September. So anything before September right now, September 8th, when they report, you probably won't get much movement unless we get movement out of the Fed and CPI data.